Hi everyone, welcome to today's session. So for today, we will be covering the podcast on is the dollar's rally going to continue? So for this, we will cover on the dollar's outlook as well as different factors that are driving the dollar's performance. So this is the main discussion for today, right? And if you guys have any questions, do feel free to put them under the questions chat. Okay, so let's get the session started. Right, so for today, for those of you guys who just joined, right, a very warm welcome. So for today, we are covering mainly on the dollar's movements and also the key factors that are driving the dollar. So just a quick introduction of myself. I'm Lee Sing. I provide FX advisory to institutional clients. I'm also part of the team that's recognized by the Technical Analyst Awards as finalist for the best FX research. If you are watching this recording of it, right, do feel free to reach out to me on LinkedIn if you have any questions. If not, if you're with us live, right, do put your questions under the questions chat. So just a quick disclaimer before we get the session started. The information presented here is not to be treated as investment advice. They are for educational purposes only. Okay, so first let's start off with different factors that are affecting the dollar. So in general, dollar, it's the world's most heavily traded currency, and it's also a reserve currency. So it's used for international trade and finance, and also just in terms of settling invoices, right? Or even just trade flows across different economies. So one thing about the dollar is that one factor that moves the dollar would be the geopolitical risk that we have, right? So essentially, dollar itself is seen as a safe haven, and we will elaborate a little bit more on why dollar is a safe haven in the later part of the slides. But in general, what this means as a safe haven is that the currency tends to appreciate in times of crisis. So when there's a lot of uncertainty going on in the market or a lot of fear and risk aversion seen in the market, this generally causes the dollar to push higher. So dollar tends to push higher in times of crisis. Another factor that affects the dollar's movement would be the monetary policy or interest rate decisions of central banks. In this case, we're not looking at just the Fed alone, right? Even though the Fed itself has a huge impact on the dollar's movement, because with higher interest rates, it makes the dollar more appealing to hold as an asset as compared to other currencies. But of course, it's also relative, right? So not only just with the Fed, but also other central banks. So for example, ECB, European Central Bank, Bank of England, Reserve Bank of Australia, New Zealand, right? So all of this, the interest rates differentials, essentially the interest rates between the different banks that we have, right, can also affect the movement of the dollar. So when there is a narrowing interest rates differential, so what this means is that you can see that not only just the Fed, right, other central banks like ECB, Bank of England, they are also raising rates. So when the gap between them narrows, right, this is when it reduces dollar's appeal. So another factor would be, of course, the US economic outlook. So in general, if you compare the performance of US as compared to Eurozone as well as the UK region, right? US itself, they are dealing with more of demand-driven inflation. So what this means is that inflation is caused mainly by more consumption, whereas in the Eurozone, the UK, it's the situation is different, right? So basically they are dealing with supply-driven inflation. So what this means here is that prices are pushing higher, and a big part of it is actually driven by energy prices. So energy crisis has been worsening, right? And it's actually made worse with the whole Russian-Ukraine conflict and basically limited supply. So when there is limited supply, it pushes prices higher. And given that Eurozone and UK import a lot of energy, right, or natural gas from import a lot of natural gas externally, right? What happens is that when this gas prices rise higher, right, it impacts their economy, and they also result in more negative trade shocks. So the final one would actually be on inflation. So inflation, it's actually the main driver in terms of why central banks are raising interest rates, essentially to bring inflation down. So for Fed, they have a 2% target range. So you can see that in the coming yesterday's inflation data actually came for October, stood at 7.7% for the US, right? So this is actually below market's expectations, and it's also showing signs that inflation might be peaking. Now, what this translates to when inflation potentially peak is that there could be slower rate hikes in the coming months, right? In the future monetary policy meetings. So in December itself, markets are looking at around a 50 basis point hike. So that it's also one of the reasons, right? So interest rates outlook would also affect the dollar's performance. Okay, so other factors that we have that affects the dollar's performance would be, for example, rising interest rates, right? So like we mentioned earlier, when there is a higher interest rates, it makes holding the currency more attractive as compared to, for example, other currencies, right? So when Fed raises interest rates itself, it tends to push the dollar higher, right? And you can see that with higher interest rates, it causes a stronger dollar. It's also more favorable in terms of trades. So if you take a look at the picture that we have on the right, essentially, this is taken from IMF, right? So these are the interest rate differentials between the different currencies, or rather between the different economies. So you can see that the difference in monetary policy that we have, right? It's also part of the reason why dollar is strengthening. So you can see that on key events, right? For example, the global financial crisis in 2008, and then again the Russian invasion of Ukraine this year, right? We can see that what happens over here is that it tends to lead to it tends to favor the dollar. And also right now we're dealing with a situation of inflation. So this also helps to prop the dollar higher as markets are expecting more higher rates. And another factor that we have is actually the performance of the US economy, right, as relative to the rest of the region. So in general, US economy has been strengthening, and also like we mentioned earlier, right, as opposed to the Eurozone. So Eurozone itself, they import energy. So when energy prices are rising, it actually hurts the economy. So this is the reason why Eurozone and UK itself, they are struggling with inflation, but a big portion of the inflation is actually supply driven. So which means that it's actually driven by higher energy costs, but it's not reflected with more demand or stronger growth. And this is not a good situation for the Eurozone, right? Because it can lead to higher recession risk. So you have a case where prices are rising, but at the same time, right, it's not reflected in the growth, right? So growth is stagnant, whereas prices are rising. So this is what they call stagflation, and it leads to recession concerns as well. So that's the main difference between US and UK and even the Eurozone's economy, right? So US itself, they have their own oil, so they are not as badly hit in terms of the rising natural gas and oil prices, as opposed to, let's say, the UK and Eurozone. So in terms of the trade shock differences as well, right? So how we can take a look at this is that look at the nature of the economy, right? So if they are more export based, so if they are heavily reliant on export, for example, commodities itself, higher, stronger dollar would help to put downward pressure on commodity prices. So essentially it makes buying commodity more expensive in foreign currencies. So usually the exchange or the buying and selling of commodities are dollar denominated, right? So essentially when dollar becomes stronger, it makes you have to pay more essentially in local currency in exchange for that, the commodity. So this will also affect the export competitiveness of countries. So let's now look at the impact of stronger dollar, right? Having understand the different drivers that drive the dollar's performance, let's look at how a stronger dollar can actually impact the economy and also what are the different implications. So for dollar index, if you take a look at the start of the chart, right, ever since the start of this year, dollar index has rose by more than 20%, right? So this means that when you compare the performance of the dollar against a basket of currencies itself, this has actually risen by more than 20%. And recently, right, actually just yesterday, we saw a pullback, right? And right now it's trading at around the 107 level for dollar index. A big part of the pullback is really driven by the CPI data. So because October CPI data stood at 7.7%, this came in a lower than the market's expectations. So there are also signs that inflation could be peaking. And what this translates to when inflation peaks is that we could see Fed itself slowing down the pace of tightening, essentially slowing down the pace of interest rate hikes. So then if you have a case where you have other central banks who are still raising interest rates to fight inflation, for example, European Central Bank, your Bank of England, right? So what this also shows is that there could be a narrowing gap in terms of the interest rates. So those are also reasons that could contribute to dollar's weakness. But in general, if you take a look at dollar as an international reserve currency, it is still the most dominant currency in central banks' foreign reserves. So what this means is that when central banks hold their reserves, right, most of them are still denominated in dollar. And if you take a look at it in terms of the trade flows, the cross-border capital and trade flows that we have, right, most of them are also in terms of dollar, and 2/3 of the dollar circulated around, they're actually held abroad. And then finally, right, a stronger dollar would hurt emerging markets and government, especially because these emerging markets and developed economies usually have their debts in dollars. So it's a dollar denominated debt. So higher interest rates is going to hurt the ability to repay these debts, right? And at the same time, what it also translates to is that in general, for emerging markets, developed economy, right, they need capital for them to grow, right? So when you have a case of basically a poorer economic outlook, it also leads to capital flight away from these countries. So in this case, right, it is actually a double whammy, right? Not only does it hurt in terms of them having to harder time to repay the dollar denominated debt because of rising interest rates, it also leads to capital flight, right? Because people tend to seek the dollar or even safe haven assets in times of uncertainty. So all of this would be the impact of the dollar, impact of a stronger dollar, right? And if you take a look at the chart on the right, this is the dollar surge, right? So the dollars, basically the performance of the dollar against different currencies. So you can see here, right? In general, dollar's performance, especially against Turkey, Hungary, right? We can see that there's a huge strength of the dollar against these currencies. And in general, right, we can see that dollar strengthened. So if you compare 2022, right, so year to date data, you can see that dollar strengthened against most of the countries except for Brazil, Mexico, and Peru. Okay, so some of these emerging markets tend to benefit mainly because of it helps to boost their export competitiveness as well. So for export competitive countries that are heavily reliant on export, when you have a stronger dollar or weaker local currency, right, it makes their goods cheaper when other countries buy them. Okay, and then next, we want to explore a little bit more on dollar as a safe haven currency, right? So if you guys have any questions along the way as well, right? I see that a few of you guys join us. So if you have any questions along the way, right, please put them under the questions chat. So dollar as a safe haven currency, right? Let's first understand a little bit more on why is it considered a safe haven currency. So you can see here, right, this is heavily dependent on, or rather largely attributed to the size of the US economy. It is currently the world's largest economy, right? So the dollar itself is heavily traded. It accounted for 2.9 trillion of the daily average volume. So because of this, it's extremely liquid, right? Because of the amount of volume that is transacted. And then in times of crisis, so if you take a look at the dollar index, right, take a look at the period where Brexit happened, right, you have your US-China trade war in 2020, and then now as well with the Russian-Ukraine crisis, dollar has been on an uptrend. What this shows is that in times of crisis, right, people tend to favor the dollar as a safe haven, right? So they tend to move towards the dollar in times of this uncertainty. So that's also another reason why dollar itself tend to strengthen. And then finally, of course, it is the world's reserve currency. So what this means is that countries would buy and hold the US securities. So this is considered a safe space to store their money. So, and finally, of course, it's in the resilience of the domestic economy, right? So take a look at the performance of the different countries right now in the Eurozone, the UK especially. They are struggling with heavy recession risk, partly driven by inflation, right? And also much slower growth. Whereas for US itself, if you take a look at the data, right, in terms of employment, we are still looking at pretty tight labor market, and also domestic growth is still resilient, right? So we can see that inflation itself, especially with a tight labor market and resilient domestic growth, what it also shows is that in this case, right, we can see that there's more leeway essentially for Fed itself to raise interest rates without hurting growth. Whereas if you are in the Eurozone, for example, right, you have a case where the economy is contracting, you have a much weaker growth, and also much weaker growth, then what it shows is that even when inflation is high, ECB itself is left with very limited room to maneuver, right, essentially to raise interest rates higher to tackle inflation, but at the same time not to hurt growth as much. So in this case, right, Fed has more leeway, right, in terms of how it can actually use its monetary policy to fight inflation. So higher interest rates prospects, right, at the same time, while not hurting growth too much, is also one of the reasons why dollar itself has been on an uptrend throughout 2022. Okay, so if you guys have any questions as well, right, do put them under the chat. Okay, so finally, we are going to take a look at the key levels to watch on dollar index. Right, so for this, we will go on to the chart on dollar index, and let's just take a look at the levels and also what we can watch out for. So a few things, right, maybe just before I hop on to the key levels on dollar index that I do want to cover that we did not really include here, it's that dollar itself, right? So when we talk about safe haven currency, one thing that we do want to recognize is that we have to also look at the market risk sentiment. So what is meant by market risk sentiment? It's essentially the idea of what's the market mood like for today. So there are three ways we can look at the market risk sentiment. One is risk on, right? So maybe let me just write it over here, right? So there are three ways we can take a look at market risk sentiment. One is risk on, okay? And then one is risk off. And then finally, it's neutral. So essentially, when we talk about market being in a risk on mode, this means that investors are generally more optimistic about the market outlook. And also at the same time, right, it will also cause risk assets to rally. So what this shows is that investors are confident that the general economic outlook is great. And at the same time, right, they will invest in riskier assets, for example, like your stocks, and this would cause risk assets, right, to push higher. Whereas dollar itself, because it's seen as a safe haven, right, so essentially they are putting more of their money into this risk asset, so they're selling the dollar in return for all these assets. So dollar itself would push lower. Okay, so this is just looking at the impact of the dollar. So in a risk on mode, generally dollar index should push lower, right? Whereas in a risk off mode, right, this is the other one, right? So in a risk off mode, essentially what we're looking at is that we are seeing a lot of fear, a lot of uncertainty in the market. In such cases, it usually leads to capital flight away from the risk assets. So people tend to pull out of riskier assets like your stocks, cryptos, right? They move into safer assets. So for example, US US treasuries, right? Or even holding the dollar. So in such cases, in a risk off environment, dollar index tends to push higher. And then finally, we talk about a neutral market risk sentiment. So this is when there are a few factors that we can use to measure this market risk sentiment. So the common ones that I use would be, of course, taking a look at the dollar index, whether it is actually going higher or lower. There is this other sentiment called the VIX, right? So VIX is a volatility index. Essentially, what this measures in layman terms, it's a fear index. So when fear is high in the market, right? So when VIX pushes up, it means that it's more risk off. So investors are very uncertain. There's a lot of fear in the market. So in this case, right, VIX is also a good gauge of the market sentiment. So other factors that you can look at would be, for example, the SPX. So SPX measures the top 500 biggest companies, US companies, right? So essentially in this case, right, SPX itself, SPX is a measure of the stock market, right? So in this case, stocks generally are seen as risk assets. So when SPX goes up, right, this means that it's a risk on sentiment. Right, so when SPX goes up, it's a risk on sentiment. When it goes down, right, then there's a more risk off sentiment. Okay, and then same thing for the VIX, right? When VIX is low, that means there's a lot of there's less fear in the market, then it's risk on. If VIX is high, there's more fear in the market, it goes higher. So when it's more fear in the market, then this is when people tend to favor safe haven, for example, right? It will help to push the dollar higher in a risk-off environment. Okay, so I hope this helps as well in terms of how the market risk sentiment is linked to the dollar index. Okay, so let's take a look at the performance of the currencies. So let me just clear this. Right, and if you guys have any questions, right, do put them under the questions chat. If you guys like the format of this podcast, right, basically on discussing specific currencies instead of maybe like us doing the live trading sessions, right, do put your feedback there as well. Okay, I have a question, right? Since only last FOMC of 2002 with last night's inflation decrease and surprise non-stop dollar index break of the key support, do you think long-term dollar strength will continue to go downturn? So this is a very interesting question, Trong, right? So let me take a look at the dollar index, right? But in general, I would say that yes. So if you take a look at it from a technical perspective, dollar index itself has broken structure, right? You're seeing bearish market structure coming in, and that's very clear. In terms of the fundamentals for December, markets, they're pricing in about 50 basis point rate hike. So you can actually take a look at this on the CME Fed Watch tool, right? So we're expecting the rates to peak around sometime next year in March. Terminal rates, right? So essentially this is the rates where markets are expecting Fed to essentially turn around and pause the tightening cycle, stands at about 4.45%, I believe. Right, so anywhere between about 4.45 to 5%, right? So in this case, right, what we have over here is that when inflation starts peaking, and also there is increasing recession risk with China's slowdown as well as essentially a global slowdown. What this also shows is that Fed itself might slower the pace of tightening, and this is especially so since the main reason for this tightening cycles is to bring down inflation. So if there are signs that inflation is peaking, right, there could be a slower pace of tightening going forward, which is the main driver for the dollar strength. So I would say in the short term, yes, you could see more dollar weakness going forward. Okay, so yep. So now that this question is actually very timely, right? So right now we're taking a look at the dollar index, key levels on the dollar index. Okay, so let's take a look at this, right? So the key levels on the dollar index, let me just clear the drawings. Right, so I am going to bring up the chart here because this is the only one that I have, right? But it doesn't really show, okay, in this case, it does show the bearish market structure. So we'll take a look at this. So these are the levels on dollar index. So you can see that by itself, right? This is a daily chart. So all these key levels that we have over here, they are marked out. This is at the first resistance level we have stands at 110, right? And then the level that prices are currently testing, which is the support zone, we're seeing a break through this level. So a break and close below this level would signify more downside. So this stands at around the 108 level. So this is the zone that we're currently in right now, right? So on the dollar index. So this is the zone right here. And then this is the resistance level. And then finally, this is the next support zone that we have. So this support zone stands at around 105. You can see that price tested as both a support and resistance zone previously, right? And also, yeah, this is the level that we saw that reversal and a break. But what I do want to highlight over here is that if you take a look at the most recent move that we have, which is essentially this region, you can see that even though there's bullish market structure coming into play, you see that market structure change. How so? In terms of the lows, you can see that this is actually the last low that was being formed, right? So price pushed higher, tested the support region that we drew a few weeks back, right? So you notice that push up, and what it shows following which is that it fails to make a higher high. So from a technical perspective, right, in a bullish market structure, we expect price to form a higher low and higher high. But in this region itself, you can see that price failed to make a higher high, came in, tested as a resistance. Over here, you saw the resistance area respected twice. And then you can see that these lows are now being violated. So you can see these lows that are being broken. So what this shows you is that this portion of the chart that we have over here, right, this whole portion that we have is that it's forming your lower lows and lower highs. So in terms of just the technical aspect of it, dollar index itself is showing bearish market structure. So until there's a clear change in the market structure on the on dollar index, I think that there is a chance that price could push much lower, especially so with this area, right? So currently it is still sitting on the support region. We need to wait for the day to end, right? And then depending on how this candle react, right? A close below the support region itself, this could now be a support and resistance area. So that's my view on dollar index, right? It's interesting to note because of how we have been seeing bullish market structure hold throughout. And then right now, right, we saw that clear break of the last low, and a big part of the dollar's weakness yesterday was driven by the CPI data, right? Essentially, CPI data coming in less than expected, and this also means that markets are then pricing in potentially a slower rate hike by the Fed. Okay, so I hope this helps in terms of looking at just dollar index from a technical perspective. Okay, and if you guys have other questions as well, right, do put them under the chat. So another interesting area, or rather interesting source that you can look at, right, to compare the dollar strength against the rest of the G7 currencies is actually Finviz, right? So this is another one that you can look at. So let me just clear this drawing. So maybe just before we go on to the summary of what we have covered so far, right, what I want to show you would be more on this. So let me just bring this up. Just give me one moment while I bring this up. Okay, so this is actually an interesting tool that you can use to track or just give you an overview of the dollar's performance for the day against the different currencies. So you just go to Forex, and then under the different time frames, you can see that these are the different time frames. Go under performance, and you can see essentially, right, this is the 1 day's relative performance of the dollar against the different currencies. So which means that for the day itself, right, Aussie is the strongest. So if you take a look at Aussie dollar, right, Aussie dollar will have strengthened the most against the dollar, right, and then followed by euro, and the weakest is of course the yen. So this is another way you can just keep a lookout, right? Or rather just to give you an overview of how the dollar's performance is like as compared to the rest of the currencies. Okay, so with that, I think we have come to the last part of the session, right? So this is a summary of what we have covered thus far. And if you guys have any questions as well, right, do put them under the chat. So in the first part of the session, we covered on different factors that affect the dollar's movement, right? So this can be based on geopolitical risk. It can also be based on different factors. In general, dollar itself is an international reserve currency, right? It's heavily traded in the world. So this is also, and we have a few factors that affect it. Part of it is also attributed to the interest rates, right? This will be also dependent on the US economic data. So there are a few factors that we have discussed that affect the dollar's outlook. And then the second part of the session, we moved on to the impact of a stronger dollar, right? So essentially how dollar would also spell more debt for emerging markets, right? Especially because big part of their debts are dollar denominated. And also at the same time, right, dollar can also help to boost the export competitiveness of countries, right? So it helps put downward pressure on commodity because it makes buying commodity more expensive in foreign currencies. But at the same time itself, right, people or countries that are more export dependent, they would benefit from a stronger dollar, right? And then finally, we covered more on dollar as a safe haven currency, right? The reason why they are seen as a safe haven currency. And also we talked about risk on and risk off market sentiment and how it actually impact the dollar's movements. Okay, so with that, we have come to the end of today's session, right? So as always, right, if you guys have any, you want to go check out the schedule of Vantage webinars, right? Go to vantagemarkets.com/webinars, right? And if you guys have any feedback on the sessions as well, right, please put them either under the chat and also, or you can send them to support@vantagemarkets.com. One thing that we do want to highlight, so right now we are trying a different format, right? So you can see that we have podcasts for this week, right? So mainly covering the Japanese yen as well as the dollar. So do let us know if you prefer this format, right, in terms of the podcast discussing the different currencies, or if you would rather take a look at setups, right? So for example, the live trading analysis. So yeah, so these are feedback that we will value as well. Okay, so if yeah, I'll just leave the questions chat on, right? So if you guys have any opinions on whether, you know, what is the kind of format that you guys prefer, or if you rather take a look at the live analysis session where we go through trade setups and review of the setups and also the techniques and concepts behind why we find the specific levels, right? You can also put them under the chat box. Okay, so I'll leave the questions here. Okay, I have another question. Okay, so if the market prices in lower rate hike to push dollar index lower, is there any corrective pullback occurring end of today or only next week? Okay, so I would say that a big part of it, right, it's based on the dollar's close, dollars index close for today. Right now, where it is currently, so let me just bring back the slide, right? So this is actually taken, I believe, about 30 minutes before the session, right? So currently prices are still testing this level. You can see that this is a key zone that price tests a few times. So in this case itself, right, if markets are actually pricing in lower rate hike to push dollar lower, right, I would say that even if we do see a corrective push up, right, the next level that we have, which is the resistance, is at around the 110 level. Okay, so I hope that answers your question, Chong. So the first resistance we have is at 110 level. Currently, prices are testing the 108 level on dollar index, right? This is a support level that price have violated, right? But we have not come to the end of today's close yet. So we're not, we need to wait for today's candles close to see if this is actually a support level that has been broken. Okay, so I would say that these two levels right now, but even if we do see any corrective pullback, right, the upside is limited with the next resistance level at 110. So likely that we are going to see any pullback, right? If we do see any pullback, it's likely going to be next week. Okay, so if you have any other questions as well, right, do put them under the questions chat. Okay. Okay, I don't think we have any other questions, right? So yeah, so that's all that we have for today. Right, so again, if you guys do want to track, okay, yeah, I see. You're very welcome, Chong. Okay, no worries. Yeah, so in this case, right, we'll probably keep a lookout, probably wait for today's close first. So right now it is just testing the support zone that we have. Okay, so yeah, with that, we have come to the end of today's session, right? So thanks everyone for being here with us. And as always, right, have a great weekend, trade safe, stay safe as well. And we will catch you guys again next week. So thank you and goodbye.